What if I told you the next oil crisis won't come from Russia or Venezuela, but from the rising flames between Israel and Iran? As tensions erupt in the Middle East, global markets are on edge. Energy prices are spiking, investors are panicking, and the world is bracing for economic aftershocks. So what does this mean for the global economy? And are we entering a new era of instability? Let's break it down. Part 1. What's happening right now? The conflict between Israel and Iran is no longer just diplomatic. It's now military. What started as proxy skirmishes in Syria and Lebanon has escalated into direct missile exchanges, drone attacks, and naval clashes in the Red Sea and Strait of Hormuz. Iran has openly supported groups like Hezbollah and the Houthis, while Israel has launched preemptive strikes on Iranian assets. As of mid-2025, the situation has reached a tipping point, with both countries threatening full-scale war. And for the global economy, this isn't just a regional issue. It's a powder keg sitting on top of the world's most critical oil supply routes. Part 2. Oil, shipping, and energy disruption. Here's why this matters. The Strait of Hormuz, just south of Iran, is the choke point for nearly 20% of the world's oil. If Iran closes it, or if tankers are attacked, oil prices could skyrocket overnight. And it's not just oil. Natural gas shipments, LNG tankers, and key shipping routes from Asia to Europe could be severely disrupted. We're already seeing this in real time. Brent crude has surged past $110 per barrel. Insurance rates for tankers in the region have doubled. Global shipping costs are rising. Again, this is inflationary pressure all over again. And it's happening at a time when central banks were just beginning to breathe after the last round of rate hikes. Part 3. Market reactions and investor panic markets. Hate uncertainty, and the Israel-Iran conflict delivers it in spades. The S&P 500 fell 3% in a single day after missile strikes were reported. Gold has surged to new highs, crossing $2,500 per ounce as investors flee to safety. Defense stocks like Lockheed Martin and Northrop Grumman are soaring. Meanwhile, travel and shipping stocks are plummeting. We're seeing a rotation away from risk and into war-safe assets like commodities, energy, and defense. This isn't just a headline war, it's driving real money to move in real time. Part 4. Global impact. Not just a Middle East issue. The effects of this conflict stretch far beyond Israel and Iran. Europe is highly vulnerable, especially with its growing dependence on Middle Eastern gas. China, which imports over half its oil through the Persian Gulf, is quietly building up strategic reserves and calling for stability. India, another massive oil importer, is facing renewed inflationary risks. And in the U.S., rising gas prices could undermine consumer confidence, just as the economy shows signs of cooling. This is a global economic domino effect, and nobody is immune. Part 5. What governments are doing or not doing. The U.S. has deployed additional naval forces to the region to maintain security in key shipping lanes, but is walking a tightrope, trying to deter Iran without escalating the conflict. Europe has issued calls for de-escalation, but lacks real leverage. OPEC has held emergency meetings, but there's limited spare capacity to make up for potential supply shocks. In short, there's no real off-ramp unless Israel and Iran choose diplomacy. And right now, that looks unlikely. Markets are realizing that the old playbook of wait it out may no longer work. Part 6. What this means going forward. This conflict is reshaping the global economy in several ways. 1. Energy prices will remain volatile. Even if war is avoided, the risk premium is here to stay too. global supply chains may reroute. Companies will avoid the Red Sea and Persian Gulf, raising logistics costs. 3. Central banks may rethink their easing plans. Inflation from energy may delay rate cuts. 4. Military spending will rise. More countries are now prioritizing defense over development. 5. Dollar dominance may grow. In times of war, global capital still runs to the U.S. This isn't just a short-term disruption. It's the beginning of a new economic risk era, one where geopolitics drives the markets more than interest rates. Final thoughts. The Israel-Iran conflict is a wake-up call. It reminds us that economic stability is fragile and that a single regional war can send shockwaves through oil markets, global trade, and central bank strategies. For investors, businesses, and governments, this is a moment to reassess risk, rethink resilience, and reprice the future. The global economy just entered a new phase. Are we ready? If you found this breakdown useful, subscribe to Finance-Related 101, where we turn breaking economic chaos into clear, actionable insight. Stay alert, stay informed, and stay globally aware.